Quick question. If you have life insurance through your job, do you actually know how much coverage you have? If you're like most Canadians, you vaguely remember checking a box during onboarding that said something about 2x salary, and you thought, great, I'm covered, and never thought about it again. Here's what you need to understand. Your group insurance through work is important and a really nice employee benefit. It's absolutely better than nothing, but it's probably not enough and it's not guaranteed. It can change because it's annually renewable, meaning your employer can switch the insurance company and the insurance company can change the price every year. Let's explain. First, the coverage amount. Most group plans offer 1 or 2 times your annual salary. So if you make $70,000 a year, you might have $140,000 in coverage. Sounds like a lot, right? But let's think about what you need it to do. That $140,000 needs to pay off your remaining mortgage. Let's say that's $300,000. Wait, we're already over. It also needs to replace your income for your family for at least a few years while they figure things out, and fund your kids' education, and cover final expenses. You see the problem. For most families, 2 times your salary doesn't actually cut it. It helps, sure, but it's not going to maintain your family's lifestyle or achieve all the financial goals you've been working toward. The second problem is bigger. You don't own that policy. Your employer does. Let us paint you a scenario. You're 35, you're healthy, and you've got great coverage through work. Awesome. 10 years go by. You're 45 now. You get an amazing job offer at another company. Or maybe your company downsizes. Or maybe you decide to start your own business. You leave your job, and your life insurance? Gone. Vanished. It doesn't come with you. Now you're 45 and you need to apply for personal life insurance for the first time. But guess what? You're not 35 anymore. The rates are higher. And remember that high blood pressure you developed at 40? Or that minor health scare at 42? Yeah, those are in your medical records now. Your premium just went up even more. Or worse, you might get declined altogether. This is what keeps us up at night. We see people who spent their 30s and early 40s thinking they were covered, and then life changes and suddenly they're scrambling to get insurance when it's more expensive and harder to qualify for. Here's what smart Canadians do. They treat their group insurance as a bonus, as a nice top-up, but they don't rely on it as their core protection. Instead, they get their own personal term life policy while they're young and healthy. They lock in a rate that's guaranteed for 10 or 20 years. They own it, they control it, it goes wherever they go. And here's the beautiful part. Because term insurance is so affordable, you can probably get a policy that's way bigger than your work coverage for less than you think. That same 35-year-old we talked about? You could get a personal $750,000 policy for around $45 a month. That's in addition to whatever you have at work. Now you're actually properly covered, and you never have to worry about what happens if you change jobs. Look, we love employer benefits. We think group insurance is a great perk, but it's not a replacement for a real financial protection strategy. So here's our challenge to you. Pull up your benefits portal right now and check how much coverage you actually have. Really look at the number. Then ask yourself, if something happened to me tomorrow, would that number actually take care of everything my family needs? Would it replace my income for years? Would it pay off the mortgage and fund my kids' future? If the answer is no, or even if the answer is, I'm not sure, it's time to get your own policy. One that you own, that you control, and that actually covers what your family needs. Because your family deserves better than whatever my employer decided to give me.